Hey everybody, it's Brian Shannon from alphatrends.net. Today's Friday, the 24th of January, 2025, and we had a good week for the market. The biotechs bounced back 5.5%, bringing them back to positive year to date. And we're pretty much up across the board for the year, except for the bonds. And Bitcoin is the strongest so far. We are seeing that we've seen a really nice bounce off the lows. Markets are 6, 7, 12, 17% off the low for the beginning of this year and just off the highs for the most part. So let's take a look at these charts and make some sense of it. As you know, we had broken that pattern of lower highs and lower lows. I was hoping that we would have gotten a pullback to carve out a higher low. Instead, the market continued to rally, and really the gap above the 5-day moving average on this day, the gap VWAP on that day, was the day to buy and hold. I screwed that one up. It's a strategy I've been using for decades, and I screwed it up. So shame on me for that. Hopefully you guys did a better job of holding it than I am, because I'm now underperforming the market. But the good news is we are only day 13, I think, into this new year, and we've got another 220 or more days to trade. And by the end of the year, there's going to be a whole lot more opportunities. The market the S&P, that is, did make a new all-time high here on Thursday and then again today. We're starting to see, as we often do, when the market makes a big run like this and then it breaks out to a new high, we often start to see it at least consolidate and typically a little bit of a pullback. So going into next week, it wouldn't be a surprise to me to see if we, kind of just consolidate and then maybe pull back a little bit. I'm not looking for this market to reverse. It's clearly strong. We've got a ton of earnings next week, and so far the earnings reports, for the most part, have been a positive catalyst for equities. The NASDAQ, not at a new all-time high, but still quite positive, just days off of, it's only closed above these levels 3 or 4 times ever, and we are in an uptrend above a rising 5-day moving average. We bounced at the rising week-to-date volume-weighted average price yesterday. That was a perfect pullback into there, and then today we slightly undercut it, so maybe a little bit more distribution in the NASDAQ. That, it could very easily just continue to move higher. I'm not trying to create a bearish scenario. I'm trying to create, draw in here what I think would be most likely, and what I would think is best is a pullback down towards the anchor from the 2025 low and the year-to-date anchor somewhere down in here, and then be able to continue to move higher. But for now, I would say just keep an eye on what is the most recent relevant higher low to you. Maybe it's here because that's where we have the most recent relevant higher low with a rising 5-day moving average. Maybe we would shake out and then your stop would go under there. The Russell 2000 is right up against, and let's just erase some of this stuff. It's right up against the anchor from the election. That's that orange line, and the blue 50-day moving average. And you see that 50-day moving average has a downward slope to it. That's because these couple of days have been averaging out those days. So by the end of next week, that 50-day moving, so we'll, Monday, Tuesday, Wednesday, we'll continue to decline in here, and then on Thursday it'll start to flatten out if it's in this area. So maybe the Russell 2000 can pull back a little bit, come back up in here, and then we can see that 20-day moving average, kind of cradle between the 20 and the 50, and then move higher. Right now, though, if you're long, as I've been pointing out, these are the most recent relevant higher lows. I think your stop goes underneath this level right here if you're long the Russell 2000, and you give the benefit of the doubt to the buyers, but are aware that we have the potential for resistance here because it's the anchor from the election as well as the declining 50-day moving average. Semiconductors, they broke higher here this week. I had mentioned that the last 3 times into this zone that they were violently rejected, and this time they ran up and then they broke out. However, they are in pullback mode right now. So we can see over here on the 30-minute time frame on the right, we broke that pattern of higher highs and higher lows, and today was a good day for profit taking. What we'd like to see, a lot of people will look at this and say resistance broken is support. It has the tendency to act as support, but so far the support isn't there. What we see as we're testing that on the shorter term time frame is a lower high and a lower low. So we'd like to see maybe it recover like this and then get going, or ideally, it pulls back down to the year-to-date anchor, pulls back in, just gives it a little bit more of a springboard for a move higher here next week. But this is one that's likely, I think, going to find buyers once again next week. So keep a closer eye on that one. I update this stuff every single day for subscribers. And speaking of that, talking about Apple, I had mentioned Apple. And on Wednesday, I had purchased the call options, the 225s that expired on Friday, right over here at $1.16. And I narrated the trade for ex-subscribers, showing them exactly what I did with the trade. In fact, I'm going to put this pause and pull that up. Okay, so I bought 20 of them at $1.16. On that very first day, I sold 5 at $1.54. Next morning, it gapped open. I sold 5 at $2.33, and then another 5 at $2.12. I sold pretty much at the exact high of the day on Thursday as it then hit daily R2. And by the way, the place where I trade these options is called Public. I'll leave a link for them. If you look at the confirmation here of these options trades, what you'll notice is, as I sold 5 contracts at $2.12, the proceeds were $2.12 each, so $1,060. Regulatory fee of 17 cents, but I got an order flow rebate. I got paid to trade these options, and I put in limit orders, so I didn't pay any commission at all. Commission-free trading, plus you get a rebate. If we take a look at what the options actually, the chart of the options here, let's do that on a 5-minute time frame. This is I was looking at it for a bounce, so I got involved, as I said, on Wednesday over in here at $1.16, sold some at $1.54, sold some at $2.33, $2.12, $2.82, and then I sold the final 3 at 83 cents. It was a 65% gain, and you can see, of course, that they expired worthless because the stock and it was meant to be an aggressive trade. So anyways, that's when we look at Apple itself, it's still in a downtrend. It's still below declining 5-day moving average. What I'd really like to see for a turnaround scenario in Apple next week would be a slight undercut of this week's low, maybe come touch that 200-day moving average, and then from there, I think you can get a little bit better bounce, perhaps go up and close this. But that next week might be a good bounce candidate in Apple. But right now, it's still just not looking good below that declining 5-day moving average. I would buy it if it did this, if it came down, undercut, got back up above here, and then I would buy in here with a stop underneath that level and then manage risk. So semiconductors, as mentioned, I'd like to see them settle in a little bit. Biotech stocks are right up against the anchored volume weighted average price from last year. That's this thicker black line right here. We also have that declining 50-day moving average right here in blue. The black above is a 200-day moving average. The orange, of course, is from the election. So I think that it's likely that, if biotech is going to turn around, it's going to need to pull back. And, a lot of people will say, well, you need it to make an inverted head and shoulders pattern. When I will just point out, as I always do, is that inverted head and shoulders patterns, you can look at them and recognize them, but they're really kind of stupid to rely on. What you really want to understand is what that means. It simply means that the pattern of lower highs and lower lows has switched to a pattern of a higher low and a higher high. That's the completion of an inverted head and shoulders pattern. So forget about the silly little names of these patterns. Understand exactly what they mean. That's always more important. So we're in a zone that should likely continue to provide some supply. So I don't view it as a good purchase from a risk reward. Maybe in the next week it does a little bit of pullback and, like I said, creates a little higher low, and then perhaps it can turn around. But when you look at the weekly chart, it's still still a mess, really. So I don't see the opportunity there so much. Financial stocks, these are the higher lows I've been pointing out to subscribers that, this is the most recent relevant higher low. Now you might even want to raise it up here or put half of it here and the rest of it in there. But the buyers remain in control here as well. Bonds got a bounce this week, and they pulled back right to the year-to-date anchor. So, as I've been saying, I think they have the possibility they're going to come down to this level. So next next week, it's going to be important. If we see that they kind of stay stuck below the 5-day moving average and break down from here back below the year-to-date anchor, then I think it's going to lead to another round of selling. If, though, they can hold the year-to-date anchor, then perhaps we're in for a little bit more of a bounce. So keep that in mind. Energy names are getting some pullback in here, and this is what we were looking for. They have broken that pattern of the higher highs and higher lows at this green arrow, and now we have this pattern of lower highs and lower lows. And until it changes that, then you want to just stay on the sidelines. We've got the declining 5-day moving average. Ideally, it would find some buyers in this zone where we have this blue year-to-date anchor, the blue 50-day, the 200-day, the anchor from the election, and then in a couple days, as this 20-day moving average begins to rise up from here, then this really looks like a high level of importance down at about, let's just call it 90.5 to 91. If it pulls back into there and starts to stabilize, then you might see another leg higher for energy names. Let's take a look at Tesla. Tesla's right on its year-to-date anchor, and it's having maybe a little bit of trouble with it. So I'm not thrilled about Tesla for a next move higher. At a minimum, it would have to get above here, which is 420. That would get it back above the 5-day moving average and break this little pattern of lower highs and lower lows. But for now, I think it's still digesting this really big move that it made here, this 150% move, that to see some shakeout even down to the anchor from the election come down into there once again, as it found buyers there a couple times, that wouldn't surprise me at all before it begins to stabilize. I think there's risk in Tesla. There's risk in every stock, but right now in particular, I think there's risk there. Let's talk about Bitcoin for a moment. We'll also talk about Ethereum and actually the Trump token. Here, anyways, Bitcoin is holding up. As I mentioned, I'm back to a core 50% position, which I've had since prior to the election. And it's interesting that I thought that we were going to break down this week because we had been testing the anchor off of that shakeout low right here. So that low is right here. I had a bid in down there, didn't get it. Instead, as it pulled back here, I bought some at that point and sold some at 103, I think over here as it was breaking down. And I was thinking that, the more times this anchor is tested right here, and you can see it keeps holding it, that it was likely to break down, but it's not. It's holding up. So I'm not adding or subtracting to Bitcoin right now. I have a core 50% position, and I own a 12.5% position in Ethereum. I think that Ethereum is building energy for a break higher here. It's not able to do it yet. It's still, it's kind of stuck below the anchor from the election and from the high that it made this year. So, I've got an alert set at 3530 on my phone so that if it does that, I'll take a closer look at it. But right now, I'm just not doing anything with it. If you look at the Trump token, it's really trading well with these anchors. This is the anchor since inception, that orange line, and you can see that's, of course, got to be orange for Trump. But it held, buyers were found in there. As that failed, then we draw an anchor off the peak, and we're trapped below that. We had been finding buyers along the anchor from this low. That switched from support to resistance right here, and the play was to be short it. It was defended at that level again. So sellers are in control of Trump right now. There's no reason to look to buy it. You can look at maybe a Fibonacci and see that. Is this even the where's the Fibonacci tool? I don't know why it's not drawing properly. I guess I don't have it shaded properly, but it's gone beyond the 61.8% retracement, which kind of makes it a failure. I would say just stay away from this thing. It's in a bad downtrend, and as I mentioned right from the very first day, that a lot of people are going to get hurt in this thing. It's not just going to disappear though, but while it's trending lower and it's below the anchor from this prior low, which has been holding as resistance, there's just no reason to be a buyer in there. Let's take a real quick look at oil as well, because oil started pulling back a little bit before the XLE did, and you can see that oil is still making a very clear pattern here. This is crude oil. It's got that very clear pattern in here of lower highs and lower lows. So until that breaks, it's not likely that XLE is going to rally either. So keep an eye on oil to see how and if it finds some support. Other than that, have a good weekend and tune in on Twitter every day if you think it's worth $10. I think you're getting a hell of a deal.